Hi, hello everyone. Welcome back to my channel. In this video, a problem is solved on set off and carry forward of losses. Kindly watch the video till the end, like it and share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is an example of problem on set off and carry forward of losses. The question is the following. Let me stress this one here. Are the computed incomes of Mr. Jagannath for the previous year 2019-20. Compute the GTI after set off of losses for the assessment year 2021. Income from house property LOP rupees 1 lakh. Loss from house property SOP rupees 1,50,000. Brought forward loss of SOP rupees 50,000. Income from profession rupees 2,50,000. Brought forward unabsorbed depreciation rupees 25,000. Capital gains, long-term gains rupees 20,000. Short-term capital loss rupees 30,000. Income from other sources winnings from lotteries gross rupees 50,000. Winnings from crossword puzzles rupees 25,000. This is gross. Third one, loss from interest on securities rupees 25,000. Interest on bank deposit rupees 20,000. dividend from Indian company rupees 20,000, dividend from cooperative societies $5,000, bank charges for collecting dividend. So from these details now we are required to compute the GTI. So solution: computation of gross total income, name of the assessee Mr. Jagannath. Previous year 2019-20, assessment year 2021. So let me insert the columns here. So particulars, inter-source, inter-head, carry forward, GTI column. So now let us go by one here. So we don't have any income from salary here. So income from house property. So here income from house property, that is income from LOP. First we should adjust. So less set off of brought forward loss from SOP, as the time expires here. So first we should adjust this one here. So the loss from income from LOP is given as rupees 1 lakh. 1 lakh. The brought forward loss from SOP is rupees 50,000. So still there will be income here, that is rupees 50,000. Then this is income from LOP, remaining income from LOP. Against this we should adjust less loss from SOP of current year, which is given as rupees 1,50,000 here. So 1,50,000. So now let us find out how much is remaining loss. It is rupees 1 lakh. This is, remember here, this is loss from SOP of current year. This we shall take it to interhead. Suppose if we have income from other heads, we can make adjustment here. Then the next one comes here, income from business. We are given profession here. Okay, so income from profession. So it is given as rupees 2,50,000 here. So now minus 1 lakh plus 2,50,000. The difference here is 1,50,000. Against this we shall adjust less brought forward unabsorbed depreciation of rupees 25,000. So 25,000 here. So now let's underline this here. So the difference here is rupees 1,25,000. So this is income from business. So this is income from business, which shall be taken to now GTI column. Yeah, this 20. So it comes here 1,25,000 here. Then the next one here, capital gains. So in case of the capital gains here, we have got long-term capital gain 20,000 and we have got short-term capital gain which can be adjusted here. So long-term capital gain less set off of short-term capital loss So the long-term capital gain is given as rupees 20,000 here. So 20,000, whereas the short-term capital loss is given as 30,000 here. So 30,000. The difference of that is rupees 10,000 here. So 10,000. So this is a short-term capital loss, remaining short-term capital loss, which shall be carried forward to the next assessment year. Then the next one comes here, income from other source. So first, before we take the casual incomes, first we shall take interest on bank deposit. Interest on bank deposit. Then dividend from cooperative society. Then less interest on securities. Interest on securities. So let's assume that this bank charges for collection of dividend, it is incurred for collection of Indian dividend from Indian company, and hence it cannot be taken here. So now, so interest on bank deposit, which is given the problem as rupees 20,000 here. Then dividend from cooperative society. It is given as rupees 5,000 here. So let us take the sum of this here now. So which comes to rupees 25,000. So 25,000 here. Then the interest loss from interest on securities is also 25,000 here. So nothing is remaining here now. So it will be now nil. Now let us take the casual incomes here. Winnings from lotteries, directly we will take to GTA column. Similarly, winnings from crossword puzzles. crossword puzzles. So now let us take to the GTA column directly here. So cross winning sum, it will be 50,000 here. In case of crossword puzzles, we have got rupees 25,000 here. So now let us take the total here. So here it is rupees 10,000. Then it is now 1,25,000 plus 2550, so it will be rupees 2 lakhs now. So the gross total income will be 2 lakhs. So the notes number 1, short-term capital loss of rupees 10,000 cannot be adjusted against other heads of incomes. No loss cannot be adjusted against casual incomes. Then it is assumed that bank charges are incurred for collecting dividend from Indian company which is not deductible as the income itself is exempt. Dividend from Indian company is exempted from tax under section 10 subsection 34. Then in case of set off of loss under house property, first brought forward loss should be adjusted, then current year's loss can be set off. So this is the answer. Now I think the notes are enough here. So let me make these things bold here. Then here it is income from profession here. Then the one more note let me give here. So loss from a house property can be adjusted against income from profession as it is the current year's loss here. So this can be adjusted here. So this is very easiest here. So thank you for watching this.